Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. Welcome to the first video back fresh off of Super Bowl weekend. And welcome back to the first video back of an exciting trading week ahead, okay? So we're just going to dive straight into this one today, you guys. I'll do my best to keep it short and sweet for you. This is going to be more of a macro analysis, so we will be covering both technicals and fundamentals over the course of this video. So let's quickly go over all of the tabs, all of the pieces that I want to share with you today, and then we'll dive into each one individually, all right? In front of us, you guys know the drill, TradingView, where we will be covering a few different charts today. Again, this is macro focused, so I do want to summarize the overall financial markets, at least those relevant to us here on the channel, as best I can. And to do that, we'll kick it off by covering the equity markets, which I feel are best summed up in one chart by the good old SPY or the S&P 500 ETF. We will then move on to the king, talk some BTC, talk some Bitcoin. Bitcoin has been holding up, so it will be interesting to see if Bitcoin is able to prove itself as the chaos hedge it has in the past. Talk a little bit about that, but of course we will take a look at the chart there as well. We will then move on and close out the video with the DXY or the US dollar index. That is the US dollar weighted against another a basket of international fiat currencies, which pretty much just shows the strength of the dollar, the base of all macro, because the dollar is the the global reserve currency, the US dollar, global reserve currency. Therefore, everything that trades against the dollar will lose strength in the case the dollar does gain strength, which it's looking like from a macro perspective. All right, so those are the three charts we'll be looking at today. In terms of articles, in terms of fundamentals, I do want to touch on a couple things with you guys. But again, we'll keep it short just because the titles of these are more important than the sum of its parts. Okay, so inflation surges 7.5% on annual basis, even more than expected, and highest since 1982. Okay, this is big because this will, I shouldn't say this will, but it's very, very likely that news of this on top of impressive jobs reports, people getting back to work quicker than expected, will encourage the Federal Reserve, good old Uncle Jerome Powell, to step on the gas pedal a little more. Okay, so we'll read over a few key points here, and in this one I don't even want to get into, but this is just causing some geopolitical tension. Whenever there is geopolitical drama, that is bad news for the markets. The markets like certainty, the stock markets, the crypto markets. Do you like certainty? Crypto markets, not so much as the equity markets, not so much as the stock market, but investors like certainty. Investors are bullish in certain environments, and obviously bearish in uncertain, more fearful environments. We all know the market's already been fearful, and this, again, news of Russia, Ukraine, etc., and potentially, I don't think this is the right call. Again, not going to get political here. That's not my place. But don't think the U.S. should get involved. Regardless, if there is geopolitical tensions, Russia, I believe, as far as GDP is concerned, is the 11th largest economy in the world. So this is a big deal. And again, no one wants to see this. No one wants a bad time. But again, you guys, investors like certainty. This is causing geopolitical uncertainty, and the markets do not like uncertainty. To kind of expand and really summarize, I went over a decent amount of fundamentals there just in that intro, but I do want to read you guys the intro to this morning's newsletter, because this really does summarize my thoughts around the general status of the overall equity market. So we'll read through this, establish again my fundamental grounding, and then we'll just dive straight into the charts and talk some technicals. We'll read over this. We'll take a look at the SPY, and then we'll go over these articles. I'll talk a little bit more about fundamentals, just kind of mixing some fundamentals with the technicals, and then we'll take a look at BTC and once again close it out with Dixie on the chart. So let's read through this guy and then get into it. Before we do, you guys, please like the video, subscribe to the channel if you're not already, and join the Waves fam. All right, so happy Monday or Tuesday, Wednesday, whenever you may be watching. We're coming out of an extremely exciting weekend into an exciting trading week. So a little story time, heads up right now. As many of you know, I attended Super Bowl LVI yesterday, and it was the experience of a lifetime. I was blessed with the opportunity to not only buy tickets for myself, but also for my parents and my lady. My dad grew up in LA. The Super Bowl just happened to be the brand new multi-billion-dollar SoFi Stadium in LA. Loaded up on SoFi prior. American capitalism, baby. And the Los Angeles Rams took home the rings last night. You couldn't write this thing any better. I'm beyond blessed and beyond fortunate to be able to live out experiences like this. It was also an amazing reminder of what the gains and the money is really for. Again, you guys, physical things can be cool, but they typically only provide temporary happiness regardless of the status of the object. Great experiences with your loved ones provide memories and stories that last a lifetime. Always remind yourselves of that. Notice I'm rocking the Waves pendant in the photo below right there. Can we zoom in? Boom. Waves pendant right there. Also just posted this on IG. Oh man, why'd I do this? Rocking the Waves pendant. So you know I brought the whole fam to the bowl. Took a bunch of photos and stories. Go check out the IG if you're at all interested in more of that experience. I did link it below, but just if you guys have Instagram, just type in Royce Jacob. I'll be right there. Working on that good old blue check mark. That should come within the next couple of weeks here. But go check that out. Show this bad boy some love. Really appreciate that. And yeah, you guys, it's just such a blessing. And I do owe you guys. And again, as far as net worth goes, I've made so much more money in the markets. But again, the newsletter, the YouTube ad rev, which the YouTube ad rev, if you haven't guessed by the number of views I get on these videos, is very not significant, but the newsletter revenue I get from you guys really is significant. So I do want to thank you guys, and again, that's what makes all this possible, and that's just I'm so freaking fortunate. I'm so blessed. I still feel that way, and again, days like yesterday are just such a good reminder of that. So thank you guys truly from the bottom of my heart. Love you guys. So story time aside, the markets are exciting me due to the fact that we're kicking off the week with more volatility. There was a breath of fresh air as we opened the trading week. So the markets kicked off the day green, but did taper off over the course of the day. My macro bearish beliefs still hold strong, with the Fed likely to step on the gas, geopolitical tensions with Russia at play, and poor economic/consumer forecast following big earnings. As I said last week, so preface on this, you guys, I've been saying this, but Facebook's earnings, PayPal's earnings, the reason they both tanked 20% on earnings, obliterated hundreds of billions of dollars of their market caps in the span of minutes and after hours trading. Again, direct sign in itself of a very unhealthy market environment, is because they are a precursor. They have the early data to what is to come. So Facebook, they make their money off ad revenue. And that's why Shopify's earnings as well are probably going to suck come February 16th. So stay tuned for that. But those are great precursors. PayPal, how much money is actually moving around? There's a lot of, again, Amazon, Google, those are more lagging indicators, especially considering the holiday season was here. But PayPal, Facebook, with considering they sell business like ad revenue to a lot of companies, and that was definitely disrupted. So there is a lack of consumer spending, of consumption in general. And obviously that, on top of high levels of inflation, which we'll cover after this, is a huge player in why again, Facebook, PayPal, very lagging indicators, at least in my eyes, of what's to come. And as I said last week, there are very few arguments that the equity indices should see more upside, and I can't imagine there's any chance that we'll see new all-time highs anytime in the near future. That said, I do think that there is a chance that select small cap / hyper growth names could begin their bounces back as the mega caps falter. Made the following trades. Of course, you guys do have to be subscribed to the portfolio newsletter group to get access to that. But hey, if you do, would really appreciate it if you guys check that out. Complete breakdown of my entire portfolio. You want to know the small caps that I'm playing right now. Very excited about one specific one. You guys know, don't say it in the comments, but very excited about one specific small cap right now. They announce earnings soon. See what happens there. But again, you guys, that's a balance. It's all about balance. Although I'm short the greater equity markets, the S&P 500, the triple Qs, the NASDAQ, because small caps, Russell 2000, for example, have gotten obliterated, have just gotten smoked over the past few months, significantly more than is rational at this point. It is more just fear-based. I do think that they can bounce back in the wake of the equity indices seeing more downside. Okay, so again, we'll see what happens there, you guys. Not going there. But if you do want to know how I'm trading, what I'm trading on a day-to-day basis, and you want to know how I'll be trading over the course of the week, just again, update this every trading day, and every trading day I send out one of these bad boys that you get in your email inbox. So even when I'm out and about, I always write this. This is my financial obligation to you guys. This is my duty to paying subscribers to write this every morning. So even if I'm not recording videos, you guys know I'm going to be doing these. And also, I've been doing midweek recaps. Wednesday, I am doing private videos similar to Sunday Stock Watch. So now you get a midweek recap and a Sunday Stock Watch. That is a video just like this one, but I make the link private and send that out via the newsletter and the Discord as well. So both those links down below. It means a lot if you guys check those out. $15 a month, $40 for every 3 months. Again, helps me out a lot, and I'm biased, but obviously I feel it's super worth it, and I work really hard to make it worth your money. Okay, so I appreciate that, you guys. Let's get into the SPY. So the SPY, This, you guys, just straight up is probably one of the most objectively bearish charts on a medium term time horizon that I've ever seen. So right now we're on the daily candles. Again, this is a macro analysis. We're kind of zooming out, regardless if tomorrow, when you guys watch this, we see a little short term bounce. That doesn't matter to me. I don't care about the intraday price action. I'm still I have high levels of conviction around my macro, more medium to longer term beliefs that the equity indices, even Bitcoin in this case, unless it does prove to be a chaos hedge, we'll get into that after this, does see more downside. So right now, bear flag. The evil twin brother of the bull flag. Bear flag, big move down, kind of like the two-wave theory again. One wave up, you see the first wave up, boom, capitulation, sideways price action followed by another wave up. This is the exact opposite. Wave down, upside, dead cat bounce, relief rally, little bull trap right here. Followed by another big move to the downside. Okay, so it's the same psychology, it works both ways, but things do typically fall a lot harder than they can climb. That's just the nature, that's just physics. Same way physics works in real life, it works in the markets as well. Okay, it works psychologically. So on top of the breakout, successful breakout of this bear flag, we also have reclaimed this very, very strong descending channel. On top of that, the SPY did close the day red. 3 candles to the downside, not really 3 black crows, which is a textbook pattern where they're a little more symmetrical than that, but psychologically it works about the same. That's also bearish. And then, in my opinion, the most bearish indicator is the fact that we're just curled down on the daily stochastic RSIs, the daily Stoch RSIs, did just curl to the downside. Blue curled over red. When that happens on the way up, very bullish. When that happens on the way down, it's curling to the downside. That's very bearish. Off of, this is the big thing right here, the same thing we're seeing in Bitcoin, the same thing so many altcoins are seeing, the double top. Okay, so the daily Stokes, the daily stochastic RSI just double topped, curled to the downside, creating that kind of M formation on the daily Stoch RSIs. And that is, from a medium to longer term perspective, very, very bearish. And that's why I do think ultimately, let's get this price target out of the way. By the end of the month, February 28th, March 1st, where I have these targets drawn, we'll test this line of support on this descending channel while also testing this very long-term line of support, resistance on this massive megaphone ascending channel that the SPY has been in for years. Sorry about that, you guys. I wish these kind of scaled, but massive megaphone ascending channel, previous resistance will act as new support. Therefore, I do think it makes sense by the end of the month. Again, that's very satisfying if this does come to fruition. Touch point here, resistance on the short-term descending channel, long-term resistance, support descending channel, sorry. If these intersected, that would take us to exactly 390 to 400. 400 is my ultimate price target by March. Let's talk Bitcoin. Before that, let's read over a few key points here. And we don't even need to touch on this, but again, you guys, geopolitical drama does create uncertainty in the markets. The markets do not like uncertainty. Investors like certainty. That makes them bullish. Okay. Key points here. CPI, Consumer Price Index, for all items rose 0.6%, driving up annual inflation by 7.5%. Marked the biggest gains since February 1982, was higher than the Wall Street estimate. Core inflation rose 6%. Real earnings for workers increased 0.01% and 0.1%. Weekly jobless claims declined to 223K, below the 230,000 estimate. So people are going back to work. Inflation is not transitory. It is absolutely real. It is an objective truth at this point. And at this point, the Federal Reserve, it's not only immoral to the lower to middle class to not tackle inflation and raise interest rates and taper bond purchases at a even faster than expected pace, but it would make them look stupid and completely incompetent at their job, which is to fight inflation, and they're obviously not doing that. So it doesn't matter if they, at this point, I'm assuming, again, unless they are just okay with looking stupid, that they don't care about the effect it'll have on the markets. It's already happening. And at this point, again, they look incompetent. They look stupid if they don't straight up come out guns a-blazing and try to tackle inflation. So Bitcoin, right now, pretty much there are two things that could play out. We are seeing the daily Stokes. The daily Stoke here just about to curl to the upside. This might be a bull trap, but hey, maybe we see this play out. Right now, you guys, I would say that I'm about 60-40 bear bull on Bitcoin. I do still lean a bit more bearish because I do think this is a bull trap. But there's also the scenario for this inverse head and shoulders play out. Okay, so base of the shoulder, boom, first shoulder here, inverse head and shoulders, head right here, other shoulder. If this does completely resolve itself, best case scenario for Bitcoin by March 1st, I do think it's 52K. That's best case scenario. Maybe we see it Probably takes a little bit longer, but I wouldn't be surprised to see $48,000 on the bullish side, just because in the case that Bitcoin does act as a chaos hedge and does start to become inversely correlated to the equity markets, which is finally starting to do again for a while there for the past couple of months. High levels of correlation, but now it's finally starting to it's finally starting to break that correlation and actually become inversely correlated. So if the Nasdaq goes up, Bitcoin goes down, and when they go down, Bitcoin is still holding strong and staying green, at least to some extent. So we could see that again. Bitcoin chaos hedge. Russia did just not legalize Bitcoin, but make it not illegalize crypto, which is good. So best case scenario for Bitcoin is going to be this inverse head and shoulders, 48K, just say that by month's end. Worst case scenario, which I do still think is very likely, is to retest this previous line of long-term resistance on this descending channel, on this downtrend that Bitcoin has been in since all-time highs back in November. Retest this previous resistance as new support. That would take us down to about $30,000, obviously strong psychological even, by February 28th. So I think these are both possible. Again, you guys, it's all about playing the odds. Right now, Bitcoin, there's a lot going on right now. There's a lot of unknowns in the air. Therefore, I cannot make I don't feel very confident in speaking in absolutes by any means, but again, that's what technicals are. That's what looking at charts is. You're trying to weigh the odds in your favor as best you can, and sometimes it's very difficult. But still want to talk to you guys about it. Still want to give you guys my thoughts. So just want to keep things as open and real as I can. So close out with the Dixie again, you guys. Dixie, base of all the U.S. dollar index, base of all macro. When the dollar is strong, everything that trades against it, which is everything, loses strength. And right now, dollar's looking great on top of, again, SPY, BTC looking pretty bad. We have just successfully bounced off of supports on this ascending channel, and it just looks likely from here. Daily Stokes also curled to the upside, looking very strong. I do think the dollar will ultimately come to test resistance on this ascending channel, bringing us up to about 98, about 98.5 by March 1st. Okay, so again, let me know what you guys think about this. I could be right, I could be wrong. Again, you guys, it's all about just doing your best to weigh the odds in your favor with all of the data you have in front of you. So let me know what you guys think about everything we talked about. Let me know if you think I missed anything, and of course, do your best to educate the Waves community overall. So I'll catch you guys downstairs in the comments. I'll see you when I see you. Heading back on Wednesday, so I'll be back in the lab, back in the office come Thursday or Friday to wrap up the week. But again, newsletter is every day, so I'll see the real ones. I'll see the OGs tomorrow morning, bright and early, for the newsletter. And yeah, you guys have a great day. Love you guys again. See you in the comments. Peace.